What is a conventional loan and what are the requirements? I'm John with ListMe Realty Group, and today we are going to discuss those topics. I am not a lawyer, I'm not a financial advisor, and I'm not telling you what to do. I'm just simply providing you the information for you so you can make a better decision. So, what is a conventional loan? Conventional loans are often one of the most popular types of mortgages. Almost all lenders offer them. Conventional loans tend to have stricter requirements than government-backed mortgages, but with so many homeowners meeting these requirements, a conventional loan might be more accessible than you think. A conventional mortgage is a home loan not backed by a government agency such as the FHA, VA, or USDA. Lenders often sell conventional loans to Fannie Mac or Fannie Mae, which are government-backed sponsored enterprises that help make mortgage financing available. So what are the requirements for a conventional loan? Lenders view conventional loans as a higher risk because the government doesn't guarantee them. As a result, lenders stand to lose all of the remaining principal and interest on a mortgage if the borrower ends up unable to make the payments. So it's important because the government doesn't cover their potential losses. Conventional lenders impose higher financial standards on borrowers who want to take out a conventional loan than they do on borrowers who want to take out a government-backed loan. All conventional loans have to meet certain baseline requirements set by Fannie Mae and Freddie Mac. Each lender, however, is free to impose its own higher standards, which are known in the business as lender overlays. What lenders cannot do is impose standards that would qualify as mortgage discrimination. As a borrower, these are the minimum conventional loan requirements you should be prepared to meet. So you should have a credit score of at least 620, a debt to income ratio of no more than 45%, minimum down payment of 3% or 20% with no PMI. And the property appraisal verifying the home's value and condition. Credit score of at least 620. Your credit score might be the most important conventional mortgage requirement. If your score is not at least 620, you can't get approved. Your credit score also affects the mortgage rates lenders will offer you. The higher the score, the lower your rate. While Fannie Mae and Fannie Mac's minimum credit score is 620, lenders might require your score to be higher. So here's a tip. Even if you don't have any credit built up, you still might be able to qualify. A 12-month history of on-time rental payments can be used to help you qualify. So what is a debt-to-income ratio? The debt-to-income ratio for a conventional loan cannot be greater than 5%. So here's how you determine what that is. Your debt-to-income ratio, or DTI, is a percentage that tells lenders how much of your total monthly income goes towards debt payments each month, such as your credit cards and student loans. How is DTI calculated? This can be a little confusing, but I will give you a general idea of how it's calculated. So it is the total monthly debt divided by gross monthly income times 100. That equals your DTI. So an example of this is, say you're considering a mortgage payment of $1,200. You have a $300 student loan and a $250 car payment, and your gross income is $5,000. So here's how you would calculate that DTI. It would be $1,200 plus $300 plus $250 divided by 5,000 equals 0.35 or 35%. So that's how you calculate that. In some cases, you'll need a DTI of 36% or less in order to borrow from certain mortgage lenders, especially if your credit score is below a 700. If you can't reduce your monthly debt to get below this level, you might want to apply for a smaller mortgage. The minimum down payment of 3% or 20% with no PMI. So many people assume you have to put 20% down for a conventional loan. Fannie Mae and Freddie Mac, however, only require 3% down. So what is good to know? When you put down less than 20%, many lenders will require you to carry private mortgage insurance, or PMI, until you have accumulated at least 20% equity through home price appreciation by paying down your mortgage or a little of each. You also must have the property appraised, verifying the home's value and condition. Lenders commonly require a home appraisal before they approve a mortgage. The appraisal reveals whether or not the home's value is at or above or below the price you agreed to in your purchase contract. The lender will only be willing to pay the mortgage if your home is valued at or above the price, not below. Remember, the home is collateral for the mortgage, so the lender wants to make sure the collateral is acceptable. It has to be a property it can sell to recoup the losses in the event you are unable to pay. So that was just a quick rundown of how a conventional loan works and what the requirements are. If you want to find us online, we are at www.listmerealtygroup.com or on Facebook at ListMe Realty Group LLC. As always, if you have any questions, comments, or concerns, you can contact Elizabeth or myself. DM us, email us at info@listmerealtygroup.com. Almost forgot our email with any questions or concerns. Have a good day.